So now we opened a position from this double top right here, and then boom. Today we'll talk about how to trade double top and double bottom patterns correctly. They are really common in day trading because they are really powerful. So it's really important for you to understand how to trade with them properly. My name is Lucas, this is Magic Markets, and without further ado, let's get right into it. So what is a double bottom or double top pattern? So these are common trading patterns made by a price. Basically, when we have a bottom, so the price is going downwards, then it is rejected from, for example, from the level, then boom, goes upwards, then eventually comes back almost to the same spot right here and is rejected once again, and then boom, reverses and goes back again. And then here we have two bottoms at exactly the same level, or at least approximately exactly to the same level, and here is what we would consider having a double bottom pattern. Double bottom or double top patterns works because there are usually some sort of strong key market level that the price is being rejected from, and then we have either double bottom or double top, and that usually gives us indications that, for example, here after a double bottom we have a potential reversal coming and we should open a buy position. And very similar situation if we have a double top pattern. So imagine here we have a strong market level. So we looked at the past market data and we know that over here the price is being strongly rejected from this level right here. And then the price is coming from the bottom and then boom, it hits this level, and because it is a strong level, the price is rejected. And then boom, it tries to pass the level again, but then same things happen. It is a strong rejection, and then boom, the price is reversed and moves downwards. And over here, this is how a double top pattern forms. We have a top over here and we have a second top here, and this indicates that the price was unable to break this particular level and it is being reversed. So we should potentially open a sell position right here and make money from a reversal. Now let's see how everything works in action and how does it look. So over here we have a reversal of the price, and here we probably have a level based on the past market data. And here we can see that in fact the price is strongly respecting this level right here and then right here and so on. And now we can see that over here we have one bottom which is touching the price, and then we have other price bottom that is touching this particular level almost exactly on the same spot. Again, remember, it doesn't have to be precisely on the same level, but it does have to be pretty close. And then theoretically, you should open a buy position right here when you identify this double bottom, and then boom, you should potentially make money. But as you guessed it, everything is not that simple. You have to also know a few other things. So for example, over here, first of all, we have a strong market level. So in this case, a resistance. As you can see, it works right here. The price is resisted. Then we have a price stop right here, and we also have a price stop right here. And again, both of these stops are being rejected from the same level right here. As you can see, they are approximately on the same level. So here we have a common double top pattern, but how do you know exactly that from this particular point right here the price will not just reverse and move upwards? Because if you open a position right here anticipating a double top, the price may eventually easily just move upwards, boom, and stop you out. What we are using as a method for this double top is basically using some sort of a neckline. And a neckline is a line for when the price breaks this neckline, we know that now we can comfortably open a sell position because it's a double top. So how does a neckline work? Well, it's pretty simple. You know from market structure that the market moves in waves. We have top, we have bottoms, or you can call it highs and the lows of the price, and then boom, we have our high right here, and in this case this is the last high right here. So our neckline would be exactly to the previous high, because when the price will break this neckline, we will know for sure that the trend definitely shifted, and that's when we could open a sell position. So now we opened a position from this double top right here, and then boom, the price hits our full take profit. So this neckline right here was essential confirmation that we needed, that to know that we should sell right here. And if we would look at this particular situation right here, basically here would be our neckline, because this is where we have our previous high of the price, and when the price would break this level, this is where we could potentially open a sell position. But it's not over just yet. I will also provide you with another potential confirmation that you could use to know that it is a double top. So let's recap what happened. We had our level and we had our potential second top forming. So here we mark our neckline, and that's perfectly okay. Always use a neckline, but we can also use what is called an indicator, which is RSI. Now on RSI you do not need to do anything fancy, just leave these default settings right here. You can change the color, and what you can do is remove the RSI based MA because it's not beneficial for you. And then the most important part is that you keep the default length of the RSI, and that's it. Now RSI can give you some great confirmations where we definitely have a double top, and all you need to do is look at the highs of the RSI. As you probably noticed, all highs and lows of the price are corresponding with the highs and lows of the RSI, and what you can do is take this high particular. So probably you have noticed that all the highs and the lows of the RSI correlates with the highs and the lows of the price. So what you need to do is take this high right here, because we are anticipating a double top, and take this high right here, our second high, and then look at the RSI. RSI has corresponding highs as well. And here what you need to do is compare these highs to look whether we have some sort of divergence, and in fact we do, because over here, as you can see, this high is a little bit lower than this high, or it could be at the same level, it doesn't matter. But what matters is that on RSI we have a different sort of situation. This high right here is a little bit higher than this high, and that means that we have a divergence, and that means that this is another confirmation for us to open a sell position. So now let's put everything together and see how we can trade this situation right here. This is the same situation as in the example. So the first thing that we do is mark or have some sort of resistance levels and key market levels on our chart. And then we can see that, for example, here we have a double top forming, but we do not enter instantly. What we do is mark a neckline, and again, in order to find a neckline, what you need to do is look at the previous high, which is right here, or even if you marked it right here a little bit lower, then that's perfectly okay still. And then boom, we can play the price and see that the price already broke this neckline right here. We look at the RSI highs, we see divergence, which is another confluence, and then we open a sell position right here. We put our wide stop loss to leave the price some breathing room. The profit just flows, the market goes into our favor, and then boom, hits our final take profit. Hopefully you guys enjoyed this episode. If you like videos like this, leave that like button, subscribe, because we do a lot of this in the channel, and check out my other strategy videos to learn even more.